Yes, I think so, and it's been apparent for some time. There's a general slowdown in the overall luxury business after what was a boom in that post-COVID period, driven by the developed world. And this year, everybody was hoping China would be back big time, and that hasn't happened. And in most analyst models, China, the Greater China region, along with China tourists, probably accounts for about a half of luxury sector growth. There just isn't a cohort out there that which can take up the slack. North America is rumbling along okay, and Europe is pretty resilient, as is the Middle East. Japan very strong on the back of Chinese tourists, but China is a bit of a black hole at the moment. We're slightly concerned that we could see this weakness continue for some time. Consumer confidence in China is very, very weak, and potentially we could see that continue into well into next year.
Yeah, one hopes though that with perhaps not necessarily in China, but globally with lower interest rates, that things would perhaps begin to come back. And I know it's perhaps a longer term story than it is a short to medium term one, but could that ultimately be the case? Not enough, of course, to mitigate the losses you'd get out of China, though, right?
Yeah, I think there's a lot of different things going on. One of which is in the last 10 years or so, we've seen this sort of democratization of the luxury goods industry. That's brought in a load of sort of young, more fashion conscious buyers. And it seems to be those guys more in the accessible luxury space have disappeared. We're seeing an ongoing trend, for example, towards travel. Some of the luxury goods companies or accessible luxury companies talking about how maybe some of those younger consumers would prefer to travel. I don't think this trend will continue forever. I think, overall fundamentals for luxury goods are very good. They're all made in Europe. It's one of the few industries that Europe does very, very well indeed. It takes years to build brands and brand integrity, high pricing power, and I think they will come back. But I think our concern is this weakness in China will probably go on for longer than many anticipate. As a result, the overall sector may just trundle along, growing, by a couple of percent compared to the sort of like high single digit, if not double digit growth many people have come to expect. As a result, there will be pressure on estimates and there will probably be pressure on multiples over the next coming months and quarters.
Yeah, but John, I thought there was a little bit of selectiveness in this sector. I thought people would be choosy, right? And ultimately say, well, the best in class, LVMH, is still one that is worthy to get into. It doesn't look that way when one takes a look at its share price having fallen more than 21% over the last year.
Yeah, certainly we as a house, we're cautious on the sector. However, we think the genuine luxury companies will do pretty well. Our preferred pick is actually Hermes. Second to none in terms of waiting lists for its products. If you have waiting lists, no matter how bad the downturn is, you're always going to get some sort of sales growth, provided you have a little bit of pricing and a little bit of volume growth. So Hermes is clearly the most luxurious in the sector, the one we prefer. Another two we like the look of is Richemont. Jewelry results today were very resilient, plus 4% in the most recent quarter. That compared to, say, a double-digit decline in watches. So Richemont as well is amongst our preferred picks. And the last one we would just highlight is Prada. This is more in the fashion end of the space. But if you manage to capture the attention of consumers, and Prada's Miu Miu is clearly doing that, you can do very well. In contrast, you can see some of those soft luxury guys elsewhere. Hugo Boss today, Burberry yesterday. Kering is another one I could mention where, for whatever reason, the collections aren't working. Maybe there's management changes. Burberry yesterday, obviously, are going to replace the CEO. That means there'll be another year before whether we see a turnaround is going to work. Hugo Boss, I don't think there's such big alarm bells with Hugo Boss. Sales off a little bit. Yes, they are spending on marketing and retail, but the underlying collection looks okay. And the decline in sales wasn't as bad as, say, for example, Burberry, 20% plus. But it just shows you, again, you really need to choose the companies which are genuine luxury or resilient, and you can pretty much ignore the rest at the moment.